If you're interested in growing a large portfolio, I'm not just talking 10, 20, even 100 properties. I'm talking a multi-billion-dollar portfolio. If that interests you, you're going to love this upcoming video. Let's go! Hey gang, how's it going? Russell Westcott here. I help real estate investors start, grow, and scale the real estate investing portfolio of your dreams. So I hope I got your attention on this upcoming video. If you're interested in building a large portfolio, Dave Steele from Western Wealth Capital is here to share all the goods with you. There's an old saying out there that if you want to go fast, go alone, but if you want to go far, go together. In this episode, Dave and I go deep into scaling your business, building out the operations, the infrastructure, and most importantly about hiring the right people, the right team to help you grow this business of yours. In order to build a billion-dollar portfolio, you need access to key players, the best of the best. You need people that are in line with the vision, the goals, and the values, and that will help this journey go a lot faster, a lot smoother, and the altitude that you can take this business will be beyond your wildest imagination. So this episode is a deep one. You will be taking lots of notes, and you will be coming back to this one often. So I highly encourage you to subscribe, hit that bell notification button. So without any further ado, please help me welcome Mr. Dave Steele. Let's get after it. Hey guys, welcome back to the Standing on the Shoulders of Giants interview series. So man off to my left here, some of you may know or may not know him, but after this interview, you will get to know him. So I've called this the Standing on the Shoulders of Giants. So I'll tell you what, after today's episode, we are going to be standing on some pretty big shoulders and we're going to be see way out into the future. So guys, Dave Steele, welcome. Welcome,
Thanks,
Dave.
Russ. Appreciate it.
So Dave, before we dive into all the details of everything we got going on here, first of all, thank you. Thank you for opening up your beautiful home out here. We're in West Vancouver and overlooking Ambleside Park and just this gorgeous place here. So just thank you. Just wanted to thank you for making time for this conversation.
My pleasure.
And you have always been so generous and amazing and very, open to help people. And you've always been very kind to me. Anytime I've ever had, there's been some challenging times, there's some things, or bounce an idea off, you've always have given me the time of day, which is, thank you very much. And it just shows that, you're good people. As we call in Saskatchewan and from the prairies, use good people, right? Yeah. So we're going to get into this, and I was sitting here and prepping for this, and I actually asked a lot of you guys to provide some feedback for some questions. And we could go a whole bunch of different directions, but the main focus that we want to do here today is I broke it into 3 sections. It's actually my entire core business of what I do is I help people start, grow, and scale. So that's going to be the conversation we're going to have today. We'll obviously start with some starting, talk about some growing, and then how do we scale at certain level. Okay, so before we do get into it, maybe Dave, if you could just share with everybody a little bit about who you are, your portfolio. Maybe I'll just interject with some questions about your portfolio size, where you're focused, where you're buying, what your area of expertise is, and things like that for if people don't know who you are.
Cool. Born and raised in Calgary. Went to the University of Calgary, had the distinction of graduating in the top 10% of the bottom third of my class every year.
And 10, okay, good.
Okay, and I won't make you figure out how many people were in my class and what number I graduated. But was never great in school, but ended up getting out. I've always been an entrepreneur, had an entrepreneurial career my whole life. I had one job in my life for 6 months as a mortgage broker in Alberta, right after I graduated. Now, other than that, have always started and operated my own companies. In the last a number of generations of what we've done, but had the same business partner for 25 years. He passed away about 7 years ago. We were best buddies in university. And we built a portfolio, Calgary, Edmonton, Fort McMurray, all across Ontario and all across the western states. We bought about $1 billion worth of real estate. And at the time, we were the largest condo converter in North America. So we would buy apartments and turn them into condos and then sell them off individually as condominiums, mostly to investors. So that was, quite a phenomenal
When was
thing.
this? What time frame?
Oh gosh, I'm going to say kind of through the 90s.
90s, okay.
Yeah, kind of through the 90s.
There's investors we meet now that have been born in the 90s.
Oh yeah, exactly. No, exactly. And it was funny. Just before my partner Phil passed away, we were both speaking at I was speaking at an Aussie Jurok event, and the person that was on stage after me was Janet LePage. And Janet finished on stage, and I thought, wow, what a powerhouse this gal is. 30 years old, computer scientist, just a really crazy way of looking at the world. Because I'd say, how do you analyze deals? And she said, well, I just put them in the model. If they work in the model, we buy them. If they don't work in the model, we don't buy them. So I was like, well, I got to see this model, right? I've been in this business a long time. But it was very, thinking like a computer scientist, it was very binary. It was zeros and ones, right? Either it works or it doesn't work. It's not like the amount of time you spend, oh, well, what if we did this? What if we did that? It was like, hey, it works or it doesn't work. So she brought us an apartment building, and she needed to raise $300,000 to buy the apartment building. And she said, would you like to put up the money? And I said, went for lunch. I said, yeah, I'll put up the money. And she phoned me that night at home, and she said, look, I've given it some thought. I really want you to invest in this apartment building, but I don't want you to put up all the money. I want you to put in 100 and bring in 2 other investors to each put in 100,000. And I thought, well, that's pretty ballsy. Like, first of all, I've just offered you the money, and now you're kind of taking it away from me. And I said, well, why? And she said, well, because I think we're going to make a lot of money on this deal. And when we do, I want your other investors to want to participate going on.
Oh, smart.
So it was very smart. So that was the first deal we did. That was 6 years ago, and that was in Phoenix. It was a 28-unit building, and 9 of the units were vacant. And they had stolen a fridge out of one unit to make the other one rentable, a stove out of another one to not make it rentable. And so when they sold the building, they sold it because they could only show the cash flow of 19 of the 28 units having income come in. So we paid the price as if we were buying 28 units, but only with 19 units worth of income. So we bought it, immediately put appliances in all the units, immediately lifted the building. They had painted the building on their own lime green. And so when I brought Janet to sit and make the presentation to the other 2 investors that were going to come in, I had no idea what she was going to say. I just said, here, go tell these guys about the deal. And she said,
let's see what she's got.
Yeah, and so she stands up and she says to the guys, she goes, yeah, this is unbelievable. She says, the way we're going to fix up this building is we're going to get all the cars in the parking lot that don't have tires on them, we're going to get them towed away. And that'll make the level of the building look better. And I thought, oh my God, this is just insane. Like, you can't say that's the value add in the deal. Anyhow, sure enough, we literally towed the cars away that didn't have tires on them. We repaved the parking lot. We painted the building a nice color instead of the lime green. We put nice signage on the building. And 2 years later, we flipped out the building and we made like 100% on our money. It was just a phenomenal, phenomenal deal. So that was the first deal we did. That was 6 years ago. And since then, we've bought 70 more buildings.
70 buildings, not units.
70.
Okay.
We've bought about 16,000 apartment units in Houston, Dallas, San Antonio, Atlanta, and Phoenix. 2 years ago, we became the 2nd biggest apartment owner in Phoenix. So there's only one guy, and I think he's got 25,000 units in Phoenix. So we probably won't ever catch him. But we've really taken the model of how do we buy these buildings, fix them up, and in 6 years we've raised just under 600 million US in
600
equity.
million in capital raise over how many investors?
Well, we have 1,200 high net worth investors, so accredited high net worth investors in Canada and the US. And then we have a number of large family office institutional investors who put in, we have one guy who's invested 125 million with us. We have another group that's invested 25 million. So we've ended up, we call it channels. We've created channels of high net worth people who go, hey, we're going to buy 10 of these a year. I'm going to give you $25,000 a deal. We have other groups that go, hey, I'm going to buy 10 of these a year, and they give us, they say, I want to allocate $2 million, so they give us $200,000. So it's really been able to, do it across a long period of time. But the crazy thing is it's exactly the same formula. So, you asked me kind of a lesson. First lesson I would say to anybody is, there's two ways you can look at real estate. First way you look at it is, I'm going to go buy some properties. I'm going to do something. The next way is, I'm going to go do something, and that's something I do. I'm going to do it over and over and over, and I'm going to do it programmatically, so that you become known for that thing. So, in our case, we bought 70 buildings. We've sold 30 of them after 30 months of ownership and running it through the value add system. And on those 30 deals we've sold, our investors have an annual average return of 30% per year. So I'm afraid to sell anymore, because right now we're at 30, 30, 30, and I can explain it so well that, it's just a nice, easy way to do it.
Well, the 30 cubed.
30 cubed.
Right, if you will. Wow. Well, holy moly. So needless to say, in 6 years, you guys have been busy.
Crazy busy.
Right now, but there's actually a gap there. I want to fill in a little bit of that gap. So 6 years ago is when you really went on a tear with your new business partner, Janet LePage, which I'd love to get on this episode as well. If you can put a good word in, I'd love to get Janet on this as well. But there was a gap between the 90s and essentially 6 years ago would be 2014. What was in between there? What was going on in that time?
Well, you asked me earlier to tell you one thing that people don't know about me. 20 years ago, I retired for 6 years.
20 years ago, okay.
20 years ago. So my kids were kind of 10, 11, 9, 10, 11. And my partner, Phil, was in the States, and he was calling me, Dave, we're buying a building in San Francisco. I got a deal under contract in Portland, Oregon. We're looking at this deal in Seattle. Will you fly down? I want to do this, this, and this. And my kids were playing hockey, they were playing soccer, they were doing all these different things. And I kind of hit a point where I just was like, I was way more interested in spending my time with my kids. And I realized, you know what, I'm going to make a big mistake here. I'm going to be in the middle of a deal, and I'd rather go to my kids' hockey game than fly down and look at the deal. So I said to my partner, look, I'll put up some money with you to invest, but I'm out. And I took 6 years off. Nobody believes it, but I watched Oprah every day. So it was kind of a highlight of my life. And I used to go to the gym, and then all my friends would call me. And they'd say, Dave, I got this deal. And I'd be like, well, okay, which part of I'm not investing, I'm not coming on your board, I'm not working for, but Dave, how about just 1 day a week? No, I'm not doing anything. So I found it very refreshing, because it kind of gave me a very good perspective around, at some point here, I'm going to retire. What do I want to do? Could I golf 5 days a week? No, I couldn't golf 5 days a week. I'd lose my mind. Could I golf a couple days a week? You bet. So going through that process was really, really good. And then, sure enough, about 5 years into retirement, I started taking meetings and listening to proposals. And next thing you know, we were kind of back at it full board.
You fell back in love again with the deal.
Correct.
Right. And guys, I teach this all the time. It's funny. I did a webinar for the group over Christmas of 20 years of lessons. And it's a marathon distance. Guys, you got to pace yourself. And comes time where you have to fall back in love again with what you're doing. Like you can't be always up and always on fire and always going on 12 cylinders. You need to take some breaks.
Well, it's a real phenomenon. I noticed that, people in their 50s, mid 50s, it's like they know they're going to have one last run here. And, maybe they're going to work till, but it's like a lot of people I know in their mid 50s now are back after having, slowed down a bit, but they're back now working like they were 18-year-olds again. Like they're just full board. They've got something that's exciting. And again, and I look at what we do. I honestly have the easiest job. My job is I raise the capital. So I deal with our larger clients. I deal with different channels, and operationally, for me to be able to do that, I have to be very connected to what's going on in the properties, because if you really take it, whatever you do to raise the money, you can only raise the money if you've got something unique about what you're doing in the business, or something that you believe or you are doing better than anyone else. So from our perspective, I have to go to bed every night knowing, what are we doing with the property management systems? What am I doing to get rents? What am I doing to advertise for tenants? What am I getting the property managers to do that no one else is doing? What am I doing to my properties that no one else is doing? So as soon as I feel really great about that, because I know it's working, then raising the money is super easy.
So what was it that saw when you met Janet and you saw that presentation, that kind of, was there a reignition of wanting to fire on all cylinders, or was it just something that you just want to get back into? Like, was there a moment, or was it just kind of enough is enough? Oprah's retired. It's time for me to come out of retirement.
Yeah, I don't really know. All I know is that the first reaction is we live in our world, and her world. She came and said, "Hey, I think there's this opportunity to buy apartment buildings, 1980s type apartment buildings, and fix them up." And having been in the industry for so long, the first reaction was, "Yeah, no, it's been done. It's been done. There's no opportunity. You can't make any money doing it." And then it was like, "Hey, let's sit down. I'd love to hear what you have to say." Right? So, the first thing you got to do is you got to beat your own barriers, because your own barrier is probably stopping you. So as soon as I sat down and listened, and then I realized, hey, there was a whole bunch of different approaches that she had. Hey, maybe there really is something here. And then, much like any investor is going to invest with any one of us, I said, how do I do this and try it on a small scale? I got nothing to lose. Same thing I say to an investor, hey, why don't you put in a small amount of money, dip your toe in, and by the way, you'll know in 3 months or 6 months of everything I'm telling you. I'm going to give you monthly financial statements on every property. I'm going to put it on a portal. I'm going to make the portal password access. You just watch how these properties, how the rents go up month 1, month 2, month 3, month 4. And if you like it at month 3, I won't even have to call you. You'll look at the numbers, you'll call me, and you'll go, wow, how did this happen? So all I did is not knowing it, fell into the same thing. Hey, Janet, let's hear what you have to say. Yeah, this is kind of a no-brainer, right? And so, as in anything, you got to find the jockey. We all bet the jockey, not the horse, right? And
I'm laughing because the guys who are watching this will recognize some of the things, some of the sayings I've borrowed of yours is bet on the jockey, not the horse, right? So.
And so I looked at Janet and I go, hey, here's somebody who at 30 years of age was one of the youngest people to ever make director level position at TELUS. So in a corporate world, she had a whole bunch of skills that were corporate level. Those aren't my skill set, right? So again, a lot of it is, how do you look for things that are significantly different from you? I'm very good at the money raising. I'm very good at simplifying the story, right? And then there's a whole bunch of things on the operational level that I just don't enjoy doing that Janet's really good at. So the first thing is you need an honest self-assessment that says, hey, what are the things I really like to do, and how much time do I spend doing them, and then how do I surround myself with that other talent, right?
And I'm not trying to blow sunshine up your skirt here at all, but you're one of the most gifted presenters I've seen too, of getting in front of a room full of people and just being yourself. And just honest to goodness, if you see one of Dave's presentations, it's like a stand-up comedy show almost. It's like you get people to send you all these jokes, and you just build in a perfect little punchline into teaching something, and then when people are at the end of it, the people are just on a high note, and people want to work with you. Right? Did you learn that from anywhere, or was it just something you picked up? Or
I just found that everything in the financing world is complicated, and people make it way more complicated than it needs to be. And so the real question is, how do you take down the story? How do you take down the story? Hey, real estate's a good thing to invest in, but if I show you charts and graphs and appreciation and mortgage pay down, am I really getting the story across? If I can simplify the story, and so, and again, most of it isn't using really complicated financial terms. The other thing that's quite interesting is that people think, oh, if I deal with accredited investors, accredited investors are really smart, so I have to have all this financial savvy. Accredited investors are just like all of us. They're no different. They're doctors, they're dentists, they're entrepreneurs, they're business people. They're not any different. And they want it simplified as well, because chances are they're gonna leave, and they're gonna go share your story with 25 other people. So if you've made it complicated, they're not gonna do any better job explaining it.
Yeah, everybody has their own challenges at whatever level is, and somebody who's making hundreds of thousands of dollars a month, has the same thing about, oh geez, how am I going to pay for the pool and this, and they don't have time to invest their money. That's why they come and talk to you.
Right.
Is that correct? Wow. Okay. So there's a lot of different avenues we can go down, but let's go back And I know we're only going back about 8 years now to the start of when you got out of university. I'm sorry. I'm trying my best. So you had your first job as a mortgage broker. It didn't quite fit. It felt like too tight of a suit, I would imagine, at the time. Was there a bug that bit you? Like, what gave you? Okay, let me ask a better question. What gave you? Did you believe that you could build a large investment portfolio? And was there kind of a moment that was kind of like a light bulb moment that gave you a belief that you could do this kind of thing?
So maybe a little differently. In university, I met Phil.
Yep.
Phil and I were entrepreneurs, and every time we met, all we would sit and talk about was different businesses that we could start. We would try things, we would do things. It's all we decided. When we got out of university, we were on a ski trip in the middle of winter, and we were up on the Shuswap, and on the way through Sicamous, BC, we saw these houseboats.
Yep.
We ended up starting a company, Three Boys Houseboats. And over an 8-year period, we went from no houseboats to 1,200 houseboats. We became, we had the largest fleet. We actually got invited to New York to go on Good Morning America, because when we went over 1,200 houseboats, we had the largest fleet of houseboats in the world, surpassing the U.S. Navy. So it was a phenomenal ride. We started when we were 22, 23, and we did it till we were 30. And it was amazing. Like, we opened up marinas and rented houseboats. Again, crazy enough, the same model. The model was we'd sell a houseboat to an investor, and then we'd take the houseboat back, put it into a rental program, and rent it out on their behalf. There were really good tax benefits at the time. The government, along the way, the government shut down the tax benefits. But long story short was, we literally would raise our money. We'd go to boardrooms in Toronto, Montreal, Ottawa, Winnipeg, Calgary, Edmonton, Vancouver. We'd go to all the big tax accounting firms, all the law firms, and we'd raise the money, and then we had a factory in Kelowna, and we built the boats. So we had 400 people working for us building houseboats, and it was amazing. And when what gave
you the gumption that at 22 that you could do this? Like, did you just didn't know you couldn't do it, or just like?
Well, the first step was that we were on the ski trip, and we saw the opportunity to build boats. I mean, we tried to rent them in the dead of winter, and everybody was rented. And we walked down on the boats, and none of the boats met the standard that we thought. We were like, well, none of these boats have stereos in them. At the time, they didn't have fridges. They didn't have childproof railings on the roof. So if you wanted to take your kid,
they weren't good for partying.
They weren't good for anything. Yeah. So there literally was, oh my God. And the guy we were with said, hey, I could build these. And we never left Sicamous that weekend. We never made our ski trip. And my partner Phil, we're driving towards Vernon to go skiing, and he turns off the road. He goes into this farmer's field, knocks on the door, and says, would you rent us the Quonset hut? And the farmer said, sure. Gave him a deposit of $50. And he said, guys, we have a place we can build our first 2 boats. And from there, we bought a marina. We got a government-backed loan from the Bank of Montreal. After we talked to 10 banks, they all said no. And so that let us build 2 boats. And from there, it just skyrocketed and took off.
Wow.
So
it really started to float.
It started to float. So it's probably as much fun as you can have in your 20s. We just had a phenomenal time. We got out of that business in our 30s. Again, I was living in Toronto. My partner Phil called me, and he said, I was just out. I met a dentist friend of mine. He wants to buy an apartment building. And I said, he said, do you want to put some money in? I said, yeah, sure, no problem. So we bought a 12-suiter in Lower Mount Royal. Lower Mount Royal, one of the nicest areas in Calgary. $26,000 a suite. Okay? So we bought it. We did our first ever fix it up. We ripped all the carpets out because it had hardwood floors. We put an awning over the front door. We painted the windows on the outside. We cleaned up the landscaping. And before we were even finished the renos, a guy came along and offered us $38,000 a suite. So we were like, wow, this is crazy.
12 and 12,
$144,000. So we're like, are you kidding me? Of course we'll sell it. So we sold the building, and had this check. We were like, wow, this is we just got to keep doing this. Is hallelujah. Not ever thinking that today those units in Calgary are 300,000 a unit. Again, there's, the other lesson is every piece of real estate you ever own, as bad as it gets, wait long enough and you're going to be just fine.
Nice.
Right.
Wow.
And so that was, so we did that, and we just kept turning through until eventually we got deals that were just too big and they were too large in size. And we said, okay, how are we going to raise the money to do this? And that's when we came up with the model. Okay, let's turn them into condos and sell them off one by one as condos. And we ended up doing, close to $1 billion worth of condo conversions for about 10 years.
Holy moly. Well, guys, we're just getting started here. I'm going to do a quick reset on the cameras here. Okay. And in the next segment, we're going to jump into a little bit more of the growth phase, like taking it from just the starting hobby, one or two, into starting to grow our property. And then we're going to eventually get into some scaling topics. And we had a good conversation off camera about, the right people. You need to have the right people in the place. So essentially the model I believe in is it starts off as I. We are all lone entrepreneurs. It's I, and then eventually there's a we, right? We have a few people and some team, and then eventually it's them. And then eventually after I, we, them, then eventually you become like the consultant or the chairman of the whole empire. That's the path we want to get down. So I'm going to just do a quick reset and then we'll be right back. Guys, welcome back. I'm sitting here and we're tiptoeing through the tulips of memory lane here. So Dave Steele here. Now, Western Canadian Property Group, or you have multiple different subdivisions and funds and stuff like that, but do you go under the Western Canadian Property Group, or what is you go under now?
Yeah, Janet and I, and the properties, the 16,000 apartments we've bought in the States, called Western Wealth Capital.
Western Wealth Capital, okay.
Western Wealth Capital, and I have a separate development company here in BC that Jim Ferry runs, and we build purpose-built rentals, and we build a bunch of properties, rental properties for the government.
Yeah. So, and website, where's the good website if people want to go check you out? Where would be the
Western
best?
Wealth Capital. WesternWealthCapital.com.
But I'll tell you what, I actually use, I'm just going to give you some props, and maybe you want to pass this on to your marketing team. I use your website as, if people ever ask what's a good website to go check out on how to do this real estate the right way and raise capital and stuff, I use yours always, because it's clear, it's on point, it's professional, it's got an entire marketing sequence of people coming in and lead gen, into webinars, into field trips. It's just guys, I'm not telling you to, how should I put this? Dave's marketing sequence he has is second to none. And I'm not telling you to go and waste his time by going through his marketing sequence, but it is a work of art to watch how you qualify.
Just make
people.
A small investment.
Exactly. It's cheap. It'd be a cheap investment. You actually will get paid to learn the marketing system. You think about it. And you guys are now launching a new app to help with the investors and all that kind of stuff. So you guys are really on the cutting edge of taking things from just a hobby into a full-scale business, which it is, right?
Well, it's interesting because if you take the whole concept of capital raising, a lot of people think of capital raising like it's this new thing. It's not a new thing, it's a business.
Yes.
So it doesn't really matter if your business is a restaurant business or a hotel business or a capital raise business. You just have to go and build it like a business.
Yes.
Right? And so the key thing, the first key thing is, what are the major trends that are really happening in the world that are good for us? There's a whole bunch of good things. Like there's private equity is becoming a big deal. You look at the big pension funds right now, look at the teachers pension fund and CPP. Some of these have 35 or 40% of all their assets investing right now in private equity. What is private equity? Private equity is what all of us do. It's investing in real estate. It's not in a liquid form. It's not like a stock you can trade on the stock exchange, but we're really in the private equity business. And the money's going in there because it has higher returns. The space that we're all in, that we're trying to raise money in, the big advantage we have is that it is generally a space that you can make more money than you can in other areas.
Yes.
So the big key is, what are the trends that are going to happen in your business? Because if you think of this, if you're in the capital raise business, what are the things, the trends that are happening that you can really take advantage of? So one is the private equity trend. One is technology, right? The technology is changing. If you just think about this, if I went to sign you up to invest with me 2 years ago, I would phone you and I'd say, hey, Russell, I want you to invest. Great. I'll meet you at a coffee shop.
Yep.
I'd pull out all the paperwork and we'd sit at the coffee shop. You'd read it over. In fact, the first time we went to the coffee shop, you wouldn't sign it up.
Yep.
You'd take it away and then you'd say, I'll meet you next Tuesday. And you'd come back, you'd have read it, you'd have all your questions, and we'd sit there and we'd go through line by line and then you would sign it.
Yep.
So I'd drive half an hour,
Yep.
I'd meet you for an hour, I'd drive home half an hour, and I'd have to do that twice.
Yep.
Right? Now, technology, I send it to you via DocuSign.
Yep.
You go click, 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 and you're signed up, right? If you have questions, you call me on Zoom, but the technology has completely
Yep.
changed that process. And what it should change is it should change that process so all that time it took us on the back end to sign clients up, we can allocate that time on the front end
Yep.
to get new clients.
Yep.
Right? How do we find more people that want to invest money?
Yep.
Right?
Well, let's just look at this, even just what we're talking about here of technology. Here we are on doing a 3-camera video shoot, and we're going to distribute this out to thousands of people. The only way we used to be able to get education was on a cassette tape that used to be sent to us, if
Right.
it was even that, or a paper newsletter you got once a month that was sent to us. Right. So it's completely changed the game that we're looking at. And I think you hit the nail on the head about treating it like a business. And everybody has different businesses at different scales and different growth. Some people want to win be Olympic champion. Some people just want to win their club tennis match, right? So everybody has different levels. And I think people are watching this because they want to elevate their game. And I'm a firm believer in two of the biggest things that you can do that make the biggest difference is focus on the raising of the money and focus on good deals. Other than that, and that's only if that's your skill set. If that's not your skill set, then you need to find somebody else to do that. Because I would imagine your business partner, Janet, would not enjoy being in front of a room full of people or talking to investors per se, but she likes the operations of the business.
Yeah, she's very good at it, but
Yeah.
You're right. Given the choice, she much prefers, shaking out the deal.
Yep.
She much prefers, tweaking the property management system or the reporting or getting the portal working. That's much, you're right,
Yep.
that's much more her bailiwick. Because one of the problems is when she meets with investors, everybody throws things out. And because she's so detailed,
Right.
she'll go home that night and spend 2 hours looking over the spreadsheet, and I'll get an email from her at 2:00 in the morning and she'll say, yeah, the question that guy asked
Yeah.
last night, well, I ran it through the model and the model's right. And I'll be like, okay, why did you do that? And she goes, well, because it drove me crazy. I wanted to know what the answer was.
Yeah.
So,
Well, sometimes we can be our own worst, not that that's an enemy. Sometimes we can overthink things too much, especially, and guys, I may be dating myself. Did you ever see the movie Tommy Boy with
Yep.
Chris? The older patriarch of the family, when he was selling things, he would talk about, I don't have to put my head up the cow's butt to find out what the steak looks like, right? You just tell them how good the steak is, right? So maybe that's kind of the role that you play a little bit of just simplifying it down, putting it into language that people understand.
putting my head up the cow's butt.
Get your head up the cow's butt. Well, you're from Alberta, born. Yeah, and okay, how do we take that car? So perfect segue into the conversation here about. Before I do, I want to know what happened to the houseboat company.
Long story short, but they changed the tax act.
Yep.
We ended up selling it to the largest recreational RV company in Canada, Go Vacations,
Yep.
and got out of the business and went on. That's when we first got
And then
into
start
it.
buying apartment buildings together. Philip, your former business partner, do you do something to honor him now with a memorial or a fund or something like that, or?
We haven't. We build houses every year in
Yep.
Mexico. We go down on the long weekend and we build houses,
Yep.
and we still do it with their family and
Yep.
our family. It's a great experience, and we did it together for 15 years, and
Yep.
so their kids, our kids. So that's kind of really the place that we've
It's
done
still
it
very
there.
close, obviously.
Yeah, very
families
close.
are. Yeah. Nice. So now we're going to talk a little bit about growing. So growing and scaling are completely different things. Like I define growing as taking it from a hobby. I'm now into it. Maybe I've got 40 places and I want to take it to 100, right? So we're now starting to grow. other than raising of the capital and finding good deals, what did you find was some of the success you had in taking it that level from hobby up to a serious business?
Well, I mean, so the first thing I'd say is most people are at a certain level and they're doing it on their own.
Yeah.
So the first big decision you have to make is, do I want to do it on my own or do I want to go find someone to do it with?
Yes.
Because it's a great opportunity at that point to find somebody with complementary skills.
Right.
So again, fundamental decision. Do you want a partner? Do you want to go do it on your own? If you decide, hey, I'm going to go do it now, I don't want a partner, I just am going to go do it on my own, what you really need to do is you really need to say, what do I want to be doing in the business and what do I not wanting to be do? Still to this day, I keep a list, and once a week on the list, I take 3 things that I keep on a list that I'll never do again. Okay. So it might be booking my flights. It might be, it doesn't matter what it is, but I'll do things and I'll go, that is a total waste of my time. And so I'll make a conscious effort to go and sit down with different people and go, okay, I did this week, but just so we're clear, I'm never doing this again. Right. This isn't my job. I don't know how I got it, but I'm never doing it again. Yeah. So for me, it's very easy. I know the things I like to do. I know the things I don't like to do. So if you're going to grow, you need to turn around and say, do I want someone who's going to oversee the property management side, the acquisition side, the money raise side, the operations side, the accounting side? There's 4 or 5 good buckets. And am I going to really find someone who might take 2 of those buckets, or depending on your size, 1 of those buckets? And then and this really becomes critical in my mind, both to the growth and the scaling, is you want to find the person who's going to fundamentally change your business. Okay?
Right.
So, a great example for us as a company was we were getting to a certain size. I'm going to say we were about 5,000 or 6,000 units. We were at a certain size.
Just so flippantly saying 5,000 or 6,000.
Right, but when we were at a small number, 5,000 or 6,000, just like, it doesn't matter who you are. If anyone doesn't tell you 5,000 or 6,000, every number you stare at is a daunting number. But we're at 5,000 or 6,000. We see massive ability to buy, and now we're like, how do we do this without one of us being there? Because our model works because above the property manager, for every 10 or 12 properties we have an asset manager.
Yes.
So the asset manager visits the property typically every week. They check the signage. They look at the closing rates of the traffic through the door. Like there's 20 things they do where they rank every property. So if I have 4 asset managers and I have 40 properties and they're each managing 10, I have a number of metrics and I look at all 40 of those properties every week and I rank them. So it's very easy for me to say, because here's Russell and he's number 40 on the list, right? He's got the worst closing rate of anybody on site, whatever it is. Now, people say, oh, Dave, I know why you guys rank them, because you're like Jimmy Pattison, you want to fire the worst person. Well, no, you rank them because at the end of the day, Russell probably doesn't come to work every day to do a bad job. Yep. So if he knows he's number 40 and he's doing things, and next week you see him at number 38, then 35, and then 32, you don't really have an issue because it's moving in the right direction. But if someone's in the last spot and they stay there, then it's really easy to have the conversation with the property manager. Right? Right now, what the property manager would say is, oh, you can't let Tom go, even though he's number 39 and he hasn't moved any direction in a month. Tom's a good guy.
Yep.
Well, Tom being a good guy and me telling my investors, hey, sorry, you're not getting any cash flow this year because Tom's a good guy, doesn't cut it.
Right.
So you have to get the metrics so you can have a harsh conversation or a real conversation with the property manager and with the asset manager to say, do we need to change the staff? Do we need to do more advertising? Like, what's the thing that's going to move the needle on this property, right?
So really, if you really think about it, pragmatically speaking, your business is really about, it's a people business, and your widget is just so happen to be it's an apartment building.
100%.
Right?
100%. People say to me, well, Dave, what's the best deal? I went and looked at it. I think that's going to be your best one. I go, hey, if Tom is the leasing manager at that building, it's probably in the top 5. If Mary is the regional manager, it's probably in the top 5.
Right.
Because, and if if I won't name the asset managers because we have 4 of them, but we have 4 really good asset managers, so we don't have that big disparity. But we can look and go, good asset manager, good regional manager, good on-site team, you're rocking and rolling, right?
And you operate your buildings better than everybody else. You actually shared a funny story. We were at an event, and you shared, and I thought it was just brilliant the way you shared it with me. And I'm going to prompt you, because I hope we can get it out. Is you said your acquisition strategy is to target buildings that have the worst property management company. Those are the ones you target to buy, and then you just turn them over to your operations, which is one of the better ones.
It's so true, right? And and again, the lesson I would say to everyone, to anyone here that has properties, again, doesn't matter if you have 1 or you have 5 or you want to grow. People walk into the property management company and they say to the property manager, here you go, here's the contract, I want you to do it. We walk into the property management company and say, we'd like to give you this building. Here's 22 expectations we have. Are we in alignment that you guys are going to do all of these things? Right? Because what drives me crazy is I'll come back and someone will say, oh yeah, this property manager, man, are they ever good at advertising? Do they ever have a good web strategy? Well, then let's take the 5 things that are good in their web strategy, let's add it to our 22 expectations, and now we have 27 expectations, and the next property manager we hire, we're going to have a website and it's going to have these 3 things on it, right? So again, it's all, because now when I'm a month in or 3 months in or 6 months in and I don't like something that's happened, I need to be able to go back to the expectations that got set with that property management company, with the regional manager and with the on-site team. Here's what the expectation was.
Wow. So it's ironic that, and people might be nodding their heads watching this, that most people sit there and go, well, we can't wait to get rid of property management as fast as possible. I'm not saying we should do it ourselves, but then we advocate the responsibility by giving it to a manager, and you're telling that's one of your greatest strengths is your ability to operate the building.
Well, the reason that I can raise money, so I'll take it one step forward because I'll answer the second part about raising the money. So at 4 o'clock every single day on every property, I get a report from I think we have 45 active properties right now. So between 4 o'clock and 6 o'clock, my phone dings 45 times with the same report. Property had 3 people through on traffic. We got 2 leases. Here's what the old rate was, the new rate. Here's how many are in the queue being renovated. Here's all the metrics on the property, right? So I don't wait until the end of a week or the end of a month and go, hey, how'd it go? And then at the end of the month, when I call the property manager, I go, how'd it go? I have to dig through all this data to find out how many people did you have through, okay?
But you proactively set the expectation.
Proactively set the expectation and said, if you want to manage this property, here's the daily activity report that we have to have. So now imagine what happens when a property goes by for 3 days with no traffic. I don't need to wait till the end of the month. I'm on the phone to the asset manager with our VP of asset management. I'm like, hey, what's going on here? Do we need to up the advertising? Do we need to drive the signs more? Do we need to do more corporate outreach? Do we need to hire a new locator? Like, what are the 5 things we're going to do? Because 0 traffic for 3 days in a row is completely unacceptable. Now someone says, well, I got 7 traffic in a row for 3 days in a row and I didn't close a deal. Okay.
What's in the conversion option?
Then I got a conversion problem. So now all of a sudden I go, my rents are too high, or I don't have the right product available, or I've got someone who doesn't know how to close the deals.
Wow.
Right.
So guys, time out for 1 second. So the way you just told that, now just imagine you're sitting across from somebody that has millions of dollars to want to invest. And that's where you're going to answer the next one about the raising of the capital. How much confidence do you have in Dave's ability to operate the business when he just tells you all the systems that you have? That would give me good confidence to write a check and hand it over.
But the full circle even goes more full circle because...
It's even more of a circle?
Well, it's even more of a circle because if you really think about it, we're in a business that has some of the worst customer service. They say job satisfaction of an on-site property manager is just slightly above a prison guard, okay? So here's Mary and here's Tom and they're on the on-site team and they're cranking through and they're hitting numbers and they're converting and they're doing business. In every other world, They have no connection whatsoever to the owner. On the day that they get a lease or 2 leases or a $200 rent bump. Now think about it, in our world, a $200 rent bump from converting a classic unit to a Gold Star, the math works out that one of our units that day on $200 went up by $40,000. So what I would say to you, Russell, if someone made you $40,000 today, is it worth your time to click a reply to all and say, wow, what an amazing day, congratulations.
Wow.
And whether I'm the first to do that, on almost every day on the 45 emails, there's 2, 3, 4, 5, 10, 12 reply to alls when there's a good day. So we've taken the property manager, I'm not going to say we've taken them out of the equation, but we've created this connection between the owners, our asset managers, and the on-site team, where we're directly connected to the people on the ground.
Wow.
Right?
And think about that for a second. I know I'm not asking you, because you're going to agree with what I'm going to say, but most time property managers, all they do is they just get, pardon the language, they get crapped on all day long. It's just one problem after another after another. And then all of a sudden the owner comes along, and the owner or the ownership team and the team says, you know what, congratulations on a good job. If they followed the procedure.
We do on-site victory lunches. We go by, our asset manager goes by. If we have we took over one property, and the other thing we track is we track work orders.
Yeah.
So we look and we say at any given time on a typical 300 unit property, you might have 20 to 25 work orders outstanding. We buy a property, it has 300 work orders on 400 units outstanding, okay? What does that tell you? That tells you that the reason we bought the building was a good reason. The guy doesn't know what he's doing, and he's really badly managing it. The problem is, you don't get very long before the new the tenants don't know the difference between the old owner and the new owner, so you better get on it. So within about 6 weeks, the maintenance manager knocked that down from 300 to 30. So he brought in 3 extra guys. They went and serviced the heck out of all the people. Again, bad customer service business. How do you do the customer service? So we got it down. Now it's in line with our metric of how many work orders. Now what do? We go to the guy and his team, and we gave them each a $50 or $100 gift certificate for a TGI Fridays. Hey, thanks a lot. It's unbelievable what you did. Then the asset manager goes by with his camera, takes a picture of all of them, posts it, and takes the photo, and it gets circulated to every on-site manager at every property we own, including 4 or 5 different property management companies that he doesn't even work for. Okay, so now this has gone virally to 45 properties with 5 different property management. It's gone to every single person in the loop, and now the emails are coming in. Hey, Tom, way to go, fantastic, from people at companies that he doesn't even work for, right? So again, it's just all about, how do you kind of create more of a community and more of a feel-good process where people get recognized, because I mean, what he did in our business, he moved. That was an absolute mountain he moved, and in most cases, the property manager would very quietly thank him, and in most cases, the owner wouldn't even know. They would have no interaction to really know that it happened.
Well, you know what the irony of all this conversation that we just had is, we're talking like it's revolutionary that you treat your team and treat the people really well and you have good customer service. In the business that we're in, guys, the bar is so low that you just have to do the basics and do the basics well, and you stand up above everybody else out there. Right. So really, the tale of growth and how to grow is to really start knowing your product, taking care and start hiring people and getting people. Like, what would you say would be the first full-time kind of people resources that you started putting into your business when you started growing at scale?
So I'd say we chose really early on that there were really 2 very underserved customers. The tenant, the resident in the building, and the investor that's giving you the money. Because in most cases, the investor gives you the money, and then there's
they get a statement once a year.
They get a statement. You try to get out to them to have coffee. Pretty soon, it gets out of your hand. So what we do is we created a portal. We put the statements there every single month. We took before, during, and after pictures on takeover day. We started doing quarterly updates. We do investor meetings. So we did a whole ton of things, because if you think about it, we're not in the money raise business. We're in the private equity business, and we're trying to raise private equity, which means you're competing with Scotia McLeod, Bank of Montreal, Nesbitt Burns. You're competing with them, and where they're beating us is they're sending our investors. Same guy is getting this beautiful statement from Nesbitt Burns every single month, either online or in the mail. He's getting it. Now, he may not be getting a return. He may be getting a crappy return. He may be getting no return. He may be losing his equity, but he's still getting out-communicated. Our industry is getting out-communicated. So again, if you raise the bar, and if you raise the bar here, you've got a constant stream of material that you can provide over here to show people what's really going on and why the property's really improving, right? And then you've got a communication way to make this person feel much better, because otherwise they give you one investment, and then every time you go back to them, you have to start at ground zero, like you're selling your whole program all over again.
I've never seen a position that way. Is really you chose two avenues. One, and think about it, it makes sense. You chose the customer who pays the rent, and you chose the investor that gives you the opportunity to buy the asset to keep moving forward and growing.
Right.
And that's the choice you made, to make sure you took white glove care of those people.
Right. And then, if you will, the topping on the cake is, Janet grew up in a small town, Castlegar, 7,000 people, and woke up one day and went, oh my God, we have 20,000 people, more than 20,000 people living in our communities. What do we need to do? And so one of the first programs she implemented, which is brilliant, is on the first day of school, we raise money from all the companies we do business with, plus we put in our own money, and we go and we get a backpack for every school-aged child with school supplies in the backpack. So you walk in, there's Dora the Explorer, there's Star Wars, and they're all laid out against the wall, because a lot of these kids are going to school on their very first day without school supplies and without a backpack. So they get to come in, right? Now, again, if you think about it, for us as a company, we don't get great. We don't do it for promo, because we really don't get the promo within the community. The people that get the promo in the community are the on-site property managers. Right. So for now, every time for the next, I don't know, think how long, they're walking through that property and they see someone, their chest is pumped out, they got a big smile on their face. They've done something really good for that family and for that child, right? So I forget the number, but it's in the thousands that we gave away this year, and so it's now we just do it every single year, and it's a really phenomenal way, again, to connect the resident with the property management team, and by doing that, they end up with a good feeling about us as the owner, which again, it's not even so much about the good feeling, it's the good feeling against no feeling with most of their previous owners. Right. Most of their previous owners, 2 doctors that lived in Austin, Texas, 2 school teachers that lived in Sacramento, never visited the property. So they didn't have a feeling, they just had those people came once a year, and their real connection was with their property management company. So again, we've tried to make this circle. Here's the on-site team, here's the regional manager. Now, take it one step further. What do you suppose happens in the lunchroom at the property management company when 25 of the properties are all together, 10 of them are Western Wealth Capital managed properties, and they're all talking about, hey, where would you like to work?
Well, you're going to get the cream of the crop.
Yeah,
that's back to the being in a people business. The assets are the house.
Right.
Okay, well, I do got to quickly reset the cameras here one more time. So we're going to quick reset, and then in the next stage of the conversation, I'm going to get into a couple tactical strategies that you guys do to add value to the property. Then I also want to get into conversation about what do you do for investors, the raising of the capital, and then we're going to get into how would somebody scale this up into like 4,000 units in 4 to 6 years. So be right back, guys. We're having a fireside chat here with you today.
Fire on. If it wasn't so warm.
Exactly. Yeah, I'm going to date this, guys. We're recording this in January, end of January 2020. So my birthday's in a couple days, right? It's one of those birthdays with a 0 in the end. The ones that give you reflection time. Sitting there, I had a moment when I turned 30 that kind of changed the course. And my 50th is kind of feeling like the same one, where it's time to change the course. And I actually sat down, and a little bit of an aside here is my new mission is to impact a million real estate investors' lives, to help them buy one more property. And what does one more property mean? Everybody has their own number. Like somebody, in your case, one more property, if you bought one more property, apartment building worth $2 million, if you held that free and clear, there's a $2 million pension plan, and say the net asset for you generates a $70,000 a year income stream. Everybody's one more property is a little different. And my goal is to impact a million people, to give them tools and resources and introduce them to people to help them buy one more property. So that's the new game I'm playing.
Great simplified mission.
Yeah, so it's a personal one, and here's the thing, and people ask, well, how are you going to do that, Russ? To be honest, I have no idea. All I know is I need to become the person to be able to do that, so I have to work on myself first, and it's going to mean getting out of my comfort zone. It's going to mean branching into the States. It's going to mean getting on bigger stages. It's going to mean meeting different people. It's going to mean elevation in my own game. No different than what you did within your elevation of this whole thing of buying properties. So enough of me. Let's get back to Dave. So you guys have a very unique model of, and I saw a presentation you did, and I think you shared it was almost like 5, and I think you got a whole bunch of tools in the tickle trunk about how you find ways to raise rents and cut costs, and then in essence raising the valuation of the building. Maybe if you just share a few of those strategies that, are you remembering the presentation I talked
I do.
About? Yeah.
I mean, the simple math is it's 200 to 1, right? For every $1 of rent you increase, your property goes up by 200 times. So if you get a $200 rent increase, your property goes up by $40,000. And that's basically just running it through the model and assuming a 6% cap rate.
Okay.
So stuff in the States.
So every $1 of savings or a $1 of increased revenue, a net dollar.
Net
right?
dollar is $200,
okay.
Right? So the minute you look at that, then you suddenly start looking, oh my gosh, we got a $50 rent increase today. You don't look at that, you go, I made 10 grand today, right? Or that property went up by 10 grand.
Nice.
So from our business, simplest way we do it is we look and we go find an out-of-town buyer. If it's an out-of-town buyer, there's a pretty good chance that it's $50 to $75 below rent, because what they've done is they've said, hey, I don't live in the city, but I like you, Russ. You're a good property manager. Mm-hmm. Please look after my building. Yep. Net effect of that is, I can tell you with pretty much certainty, $50 to $75 a month below rent.
Right.
You're getting your 5, 6, 7% a year. The property manager's working to keep you 75%, 80. The property management business, their job is to keep everybody 7 out of 10 happy.
Right.
My world is, we don't live with 7 out of 10. We live with 95. We want 95% happy.
Yeah, 9.5 out of 10.
9.5 out of 10. So how do we, what do we have to do to get out of that comfort zone? So the easiest place is generally rents below market.
Yep.
Then we look to put washer dryers in. You can get $50 a month. That's 10 grand.
Yep.
We look to move the rents from classics, renovate them. And again, to give you a concept, when we started the business, we could renovate a unit in 28 days.
Yep.
We can now renovate a unit in 8 days. So we used to buy a building and hope we could do 4 or 5 or 6 a month.
Yep.
We now try to do 8, 10, 12 a month. So if we do 10 a month and we get $150, that's $30,000. 30,000 times 10, do 10 renovations, that building went up by 300 grand a month.
Right.
Do that over a year, that's $3.5 million. So the value creation becomes very programmatic, because now all you're doing is saying, how many can I renovate? How many washer dryers can I do? And how many can I move the rents to market? Yep. Because you also can't just do it every single month, right? Come December, you may not want to move any rent increase, because you don't want people moving out on Christmas Eve. Yep. So we have a lease management program where you want to drive the rents to the busiest times of the year. And so there's kind of a whole formula around it. But the real componentry is how do you get those? and then where else can you drive things? Where else can you put technology in to really make more money?
And you even do things like, once you take out the laundry rooms out of a lot of apartment buildings, you then repurpose those spaces, do you not?
Yeah, so a big market is pets.
Yeah.
So for instance, a lot of properties, the ground floor units, will put in a dog yard.
Yeah.
A dog yard costs us $1,000. We get $125 per month for somebody who wants a dog yard outside of their patio. Well, $125 times 200, 25 grand. I put $1,000 in, I got 25 grand. Now I have people living in the building that have pets. They're also paying an extra $50 more a month in rent. So I'm getting another $10,000 appreciation. So if I can get someone to move in with a pet, that's $35,000. I've now emptied out all the laundry rooms because I put washers and dryers in every suite. One of the things we do, we put a dog spa in that room. So there's a dog washing, dog drying station, again. So now you're not just partially catering to people with pets, you're really full on marketing. And when they come, they look at your property and they go, hey, there's nowhere else I'd rather be. And they're a very profitable tenant to have in place.
Now, then you were experimenting with storage lockers and Amazon lockers and things like that. Do you still do those, or?
Yeah, those are huge for us. I mean, we literally put those in day one. You get anywhere between $5 and $10 a month per tenant, but you get them on every single person. So every time you sign a lease, you're getting $5 or $10. So you could put one of those Amazon lockers in where they deliver the package and you punch the key in. The property goes up by $500,000 just by installing one.
Wow.
So again, what we do is we've just programmatically said, when we take over the building, day one, the new signage shows up, the new pool furniture shows up, we paint the buildings. People say, Dave, what colors do you paint the buildings? 3 color choices. We don't, and every one we take over, the new designer comes in, oh, we should paint it this color. No, we have 3 color choices. Pick one of the 3, or if you want to propose a 4th color, we'll look at a 4th color, but it has to knock one of the other 3 off and become one of our new colors going forward. Right? You don't drive along and see a McDonald's and it's different colors in every city, right? They're same colors, same seating. You go into the leasing office. All the leasing offices are identical. All the computer stations in the leasing office. It's all done just so we can do it over and over. Because the key is you do it fast, right? If I can go do this and I can show you that I can renovate this many units and put in this washer dryer and I can double your equity. If I do it in 5 years, I've doubled your equity in 5 years, you've made 20% a year. If I can do it in 3 years, I've doubled your equity and you've made 33% a year. So it's really just about, does the model work, and then what's the speed that you can execute?
And then it's just the velocity of execution.
Yeah, it's the velocity of execution without going so fast that you create tenancies, people moving out, and you end up with, lots of people in this business call me and they're like, Dave, I went way too fast and now I've got 25% vacancy and it's going to take me ever to fill the building.
Right.
So you've got to get that balance of keeping the building full, because the reality is people don't mind paying more rent if they actually can see you're doing the work.
Right.
Most people go in saying, I'm going to go do all this stuff, start charging more rent, and then they don't do the work fast enough. As good as their intentions are, it takes a lot longer, and now you've just got to hold a bunch of disappointed tenants.
Right. Okay, well, changing gears onto that vein, what are some of the strategies you do to separate yourself in the raising of the capital? What is the, like you talked about, you're competing. First of all, you elevate your expectation not to just compete against other people in the industry. You compete against the Nesbitt Burns and the Raymond Jameses, and that's who your competition is. By just elevation of your expectation, you already set a new standard. What are some of the things you guys do for raising of the capital? We're going to take it from two standpoints. Of maybe the finding of the people and the qualification, and then also on the follow-up from there.
Yeah, I mean, so we've seen the first wave of technology that's really hit the sign up of the process. I think there's a whole nother wave of Netflix style technology that's going to come, where you're going to have platforms where all the information is there. Investors are just going to log on. They're going to tick the boxes as to that they have to be able to qualify to get in behind the curtain. But once they've ticked the boxes, the videos, the marketing material, everything sits there. And so, then the only question is, how full can you get the funnel at the top, right? We're all dealing with a funnel of, thousands or tens of thousands of people, but at some point these funnels are going to have millions of eyeballs coming in, going, this is really just, here's where you go if you want to have the.
So you're going to have it more self-serve as opposed to or somebody presenting it, if you will.
Correct.
Like you'll get on, do one presentation, do your Shecky Green comedy routine, and then you'll have tens of thousands of people will self-serve and watch it.
Right.
Right.
Again, the same thing is, I'm known as the guy in the world for, let's say I'm known as the guy in the world for rent to own, or I'm known as the guy in the world for building infill properties, or I'm known as duplexes in Edmonton, or I'm known, everybody kind of ends up in that category. And then it's a question of, how do you find more places where you can get out to know that? What do I want to be known as? I want to be known as the place you can put your money and you can understand exactly what we're doing, and you got a shot to make 20% a year on your money. And here's the formula that gets you there. And you look and you go, oh, I'm putting my money in. I'm not going into Tucson, Arizona. It's not one of the 12 markets we target. If you want to invest, we're going to be in one of these 12 markets. We're going to target this. We've done 70 of them. We've exited 30 of them. Here's the returns we've got on the 30 we've exited. So people so that story now, our story is very digestible. And I would say to anyone else who's raising money is, get your story and say, what's the category you're in? Because we're all in the world of private equity. And now what we have to do is say, where on the shelf of private equity are we? Right? You might have a borrowing fund that pays 12%. You may have a joint venture fund that buys suited single-family homes in Kelowna, and the only market that you're going to do is you're going to buy or build brand new suited single-family homes in Kelowna, Kamloops, and Penticton. Right. So that's your nice simple story. Or you try to create this complicated story that says I'm all these different things in all these different cities, and then every time you tell the story, you've got to make it a long story.
Now, I remember you ran through an exercise once of basically, and you challenged yourself and your company after been doing all these thousands and thousands of units. You challenged to the team, goes, guys, what do we do? What do we do? And then you hone down your message. I'm going to put you on the spot here if you don't mind. Like, if you were to give in a real quick, what do you guys do? If you were to give that in a quick... Now, guys, what I want to do is this as an example, if you're watching this, how clean and clear you can get down the concise message.
I mean, we're just real estate investing the way it should be. It's just nice and simple, and it's a way to take a chunk of your money. So two things. One is, no matter how great your presentation is, no matter what you do, all you're going to do from any one person is get a chunk of their money. Okay? You're still going to have a chunk of your money in the stock market. You're still going to have a chunk of your money that's sitting earning interest, low interest, that's sitting there in case a deal comes along that you have to put your money in right away. So you're still probably going to have a chunk of money where you're going to buy your own income properties. But so now it's a question of, a perfect example for us, prime customer for me is somebody who's 50 years old and probably sitting here listening, and they've done this 1,000 times on their own, and they just don't want to do it again. And now they're sitting there with a chunk of cash, and they're sitting saying, hey, I like what these guys are doing. I like the exposure to the US. It sounds like they know what they're doing. It's understandable. If I want to do my due diligence, I can jump on a plane and fly to Dallas, Houston, Phoenix, and go look at 10 of their properties, see how they do it. And by the way, what a great way for me to take a chunk of money and put it to work, right? So the big thing is that you're only going to get a chunk of people's money, and so it's really just getting that messaging across. And and not presenting it in such a way that you think you're going to get this crazy amount of money. To me, it's not a crazy amount of money from any one or two people. It's just very broad based.
Yeah. Well, and I often say that most people want the end result. And if at all possible, people don't have to want to do all the work to get the end result.
Right.
Like if I could sit here and go, I could do all, and I make the analogy a lot of times with a lot of people, this is more in Ontario, where people, in order to find cash flowing properties, they have to buy a property, and then they have to go through the process to convert it into a duplex, and have to go through all this time in order to just end off at the end with a property that cash flows $500-600. Or just go buy something that already exists, it's already brand new, it's already constructed, or invest in a fund and you're going to get the same kind of return with no work.
Right.
In essence. Like that's the end result game you want to play.
Right. And I mean, even in BC, we build brand new condos. We're building brand new condos right now in Victoria and Langford. And exactly the same thing. They cash flow $100, $150, $200 a month. Yep. And it's just shocking how many people are just looking. And in a lot of cases, you go, what's the real need you're filling? The real need you're filling is you've got people that have money and they realize they're not going to get their kids into the market they live in. Yep. So they want to get them into real estate. So they're going to use this to find a $275,000 one bedroom or a $350,000 two bedroom that they can get them into the market. It's nice and safe. They're rented for $1,400 or $2,000 a month, and they can get them in the market and go, hey, those are good growth markets, and boom, so when, the need we think we're filling is different than the need that's really out there.
Okay. So next line of question, and we'll go down this one here. And this is something we talked about off camera a little bit. We started going down it, but we didn't go down it. We were talking about adding the people, resources to the team to start scaling it. And you shared a wonderful story that you were already up to, say 60 apartment buildings, and then you brought in somebody else into the team that had a completely different perspective that changed the trajectory you're going. Maybe share that story if you would.
Yeah, and I mean, the lesson from it is whatever you're going to hire, spend a lot more time thinking about who the person is that you really want to bring in that's going to change your game.
So focus more on the who, not the what they're going to do.
Correct.
Okay.
Go find out who the person. Like if I wanted to go figure out someone that could do podcasts and build a community, you would be right at the top of my list. So we're sitting there, we've got a bunch of units, we've decided we've got an opportunity to add a bunch more. We start looking around and we go, hey, how are we going to do this? We find a guy in Phoenix who we've since brought on as our executive VP of asset management. And his previous job was he worked for Greystar. Now Greystar owns and manages 220,000 apartment units across the US. Okay. So his portfolio in the West was 32,000 units. So all of a sudden, we're sitting there and we're going, like, is he even going to want to leave what he's doing to come and work for us with 5,000 units? Like, we're so far out of, my God, I can't believe, how did we ever get to 5,000 units? This is phenomenal. Yeah. And then all of a sudden we're sitting there going, what, how do we get him on board?
Yeah, at 32,000.
Right. And so, and again, great conversations, turns around, mid-50s, wants one more kick at the cat. He's going to do one more big thing before he retires. Loves the idea of an entrepreneurial business, loves getting involved. We come to a deal, he's on board. And now, like, all of a sudden, every door you can imagine in the property management world opens because we're on the inside opening the door, not on the outside trying to figure our way in.
And then you said he was also then starting to introduce you to people that you wouldn't have gotten into those introductions. You'd share with that one lawyer.
Yeah, 100%.
Share that story maybe.
Yeah, so he connected us with a lawyer and a law firm who's raised $3.5-4 billion. So all of a sudden it's just again, if you go at it that I don't know how to do property manager, so I'm going to go hire somebody and I'm going to make them my property manager. No. Then there's no growth. Like they're going to look to you for the growth, like you're the expert. And so the word I use is the game changers. If you want to get out of your number, And I'll tell you, if you talk to Janet, myself, the sleepless nights we had, like, oh my God, what have we done?
Yeah.
We've just, we have layered on the jet fuel to that now. But then you turn around and you go, hey, I can go and add X thousands of units, and I literally don't have to spend any of my time wondering if we can absorb them. Well, I don't have oh my God, I don't have the capacity to do that, right?
So you sit there, and good for you for a couple things, not letting, say, your ego sit there and go, well, I've built the houseboat company and I've done $1 billion here and I've done all this, of not saying, well, I know everything and why do I need to bring somebody on? You still, at the level you were wanting, brought on somebody that's, quote unquote, dwarfed what you've done up to this point.
Right.
So just, I guess as a leader, that's what we have to do from time to time.
Well, if you want to make the jump, the jump's going to be, the jump isn't incremental. The jump is, and I think the great saying is, if you want to get from one island to the other island, you can't straddle it. You got to leave that island behind and go to the new one.
Yeah.
So, for us, we got committed to saying, hey, where's the real hole in the business plan? Is there really growth here? Yeah, the growth is we need to make sure we've covered off the asset management.
And usually in any entrepreneurial journey and success story, typically the founders have to step aside and let somebody who's like a CEO role come in to take the ship to the next level, right? Is that where you're feeling you're at now, or are you still hands-on and in it? Like, where are you in the process?
Great question. We literally, the latest hire we just hired is we hired Rob Malley, who was in a prior life was the CFO of Van City. So, so again, what we've really tried to do is we've really just tried to beef up the key areas, right? How do you make the reporting better? How do you get the financing to go smoother? All those things that are financial. So, I don't, Janet's 37, so she's definitely, into building this. I just turned 60, so I'm probably not as, I probably won't be around as long, but.
Isn't 40's the new 60,
yeah, 40's the new 60. So, I mean, it's still a fun ride. But again, part of what I believe is if you want to keep it fun, you've got to keep it fun by knowing you've got the horsepower, particularly in the areas that you don't want to do.
Right. And it's all about the people and the building of the team, and truly, you can only grow it to as much as you grow yourself in the process.
Right.
Okay.
Right.
Holy moly, there's a whole other avenue of questions I could go down.
But if you go right to the beginning, which I think is probably going to be the most common question, like I'm at this number of units and I want to get to here. The only transfer, hey, I hired the CFO of Van City. That just sounds like, oh my God, I have 20 units. I'm not going to go hire the CFO of Van City. But the point in it is that for us, that's way out of our comfort zone of what we thought we would hire for the position at any point. It feels like even today, it feels like it's out of, we sit here some days and go, why would he leave? And not leave, but why would he join us to do that, right? So the point is if you're not having that conversation about the hiring of someone critical, then that's the conversation you need to have. If you really believe, I'm going to go from 40 units to 80, or I'm going to go from 40 to 60, or I'm going to go from 40 to 100, you better be having the conversation. How can I afford this person? How can I compensate them? How am I going to do this? Because I don't know that I can afford them. But the other side is, you're exactly right.
If your goal is to grow.
If your goal is to grow. And it might force you to the heart-wrenching decision of, 40's good. 40's good. I don't need to get to 60. I don't need to get to 80, right?
Well, that's where you probably have that moment of reflection to determine if you're all in or not to the next level or not. Right. And some people at that time, maybe it's just, I'm good, I'm going to enjoy Hawaii, I'm going to go golf, I'm going to take 6 years off and watch Oprah, right? And then there's got to be another, there's got to be the fire and the hunger in the belly to go forward. Wow. Okay, so I have a couple batteries to change on a camera, I see, and we're just getting rolling here. So the next line of questioning we're going to roll into here, I want to ask more into what's next for you. Like, kind of what is next? You've been there, done that. And a couple philosophical questions. The other one is, I want you to share the story. I remember you shared once of an early lesson you had when you were at an EO group, an entrepreneurial organization group, and you were sitting beside somebody and it was a missed opportunity. Remember that story?
I do.
I want you to share that in this next segment. Okay?
Great.
Okay, be right back, guys. All right, guys, welcome back. So truly blessed and honored to have Dave here. So if I do forget, I know I mentioned at the beginning, I just want to thank you. I want to thank you for taking the time. This is an incredible gift that you can offer to a lot of people. And usually in the last segment, I get a little, we're going to have an Oprah moment here, maybe. We'll see where it goes. I imagine you've been there, you've done that, you've houseboats to condominiumizing apartment buildings to 70 apartment buildings in 8+ years, and now that you've maybe had a chance to kind of reflect back on this, like what's next? Like what is next for you in this game? So the challenge, I think, is getting off the horse, right? Because if you get off and then you decide, I feel like I want to get back on. There's no more Oprah to watch.
Yeah,
right?
well, and once you're off, you're probably off.
Yeah.
So the commitment I made about 2 years ago is I take a month off a quarter.
Okay.
So I don't do it usually straight all in a row, but every quarter I diligently book my calendar to make sure I'm not working 1 month a quarter. And that's been great. So, my guess is that over time I'll extend that out a little bit longer. And again, that's part of from our side of building out the team and really having a team of people that are gonna keep it going long past my involvement.
Nice, and so I'm a big fan, and I believe in. It's not about the money that we make in this journey. It's not about, things. It's about the lives we impact, and it's about the people we touch. It's about how we can contribute and give back. What are your plans to make an impact? I imagine you don't have to do this anymore. I would imagine. But what is your goals and to make an impact into other people's lives on a go-forward basis? Well,
I mean, that's a really great question. So everything that we do with the backpack program, we do something where we choose one tenant every December in every building, and we give them a rent-free Christmas. So we go to all the property managers and they nominate families that are, one lady this year, her husband passed away of cancer in November, 3 kids. And so, we consciously go and try to find, again, how do we do something more starting with the communities we're in? And, again, what it's really done is it's taken, the big goal of our company is, you quickly lose sight, I want to get to 5,000 units or 10,000 units or 20, like that quickly loses its excitement. And because quite frankly, most of the time, I don't think any of us really know how many properties or how many units we have. 38 buildings, 45 buildings. Like it's not I know it sounds kind of crazy, but you don't sit there and really fixate it on every day. But really what it's become about is that the more we do, the more money and the more freedom it gives us to take that money and actually do better things with it. And so that's really been a big function of and with that, again, I keep talking about the full circle, but with that, it just brings so many more people into the equation because so many more people enjoy working with us, want to be part of the company, want to become part of the growth because they see that the more we do, the more we're able to help in all these areas.
You don't attract the talent that you're attracting by not making an impact in people's lives.
Totally.
You truly don't.
Yeah, and we really do live in a world today where again, if you had told me at the beginning, the first time we gave away the free rent, we had a long discussion saying, wow, what about the investor who's just that focused on the money and the returns we get, saying, can you really go ahead and do that? And you can completely substantiate doing it from even any financial metric. Like financially, it makes sense to do it because it's just such a goodwill gesture within the community. But more importantly, it really is saying, how do we completely transform the way the property management and the rental apartment business is being done. Right? Because lots of other companies have transformed their industries doing it. And, real estate's always been a business that's much more about dollars and cents.
Yep.
And, one of the things Janet loves to say, and I just love it, is she says, we do business on term sheets, but not term sheets alone. We do business on human terms. And so, those are the things that really resonate with people.
Nice. And I teased this part out in the last segment just before we went in there. It was a story that you shared was actually, it really was a very valuable point about missed opportunities. If you don't mind sharing that, I'd just love to hear that and share that with everybody.
So we were, I was in San Francisco as part of an entrepreneur organization, and we had our annual conference, and I was there. And my buddy and I were sitting around, and Peter Thomas came, and he said,
who's Peter Thomas?
Peter Thomas is the founder of Century 21.
Okay,
and very prominent, very prominent Vancouver real estate guy.
Yeah.
Very, very prominent. Done extremely well. And he said, guys, I'm going to San Antonio. I've got my private plane. Do you guys want to come to San Antonio? I'm buying this piece of land, and I'm gonna develop this piece of land. It's near the SeaWorld, and I'm gonna develop this piece of land. Do you guys want to come? And I looked at my calendar, and I had a couple events going on the next day that I had to be back. So I said, geez, I'd really like to come, but I got to go to Calgary. I got to fly back. So I got in the plane and I flew home. My buddy got in the plane, the private plane, flew there, invested $1 million that literally became $10 million. But I didn't invest because I was too busy because I had to get back to work, right? So, what's the lesson? Other than I'm an idiot, the lesson is, don't be too busy to go back to work, right? Most of our money we don't make in the office. We make somewhere outside the office where a great idea hits us. And so.
Well, and if you actually just think about it back, you and Phil, Phil or Philip? Phil. If you guys maybe didn't have that same class together, was it an economics class or something? What was the class?
A business class.
Business class.
Yeah.
Just imagine if you had different classes or something, you maybe never ever met each other. Totally. You would have never had that trip to Sicamous, which would have never gone skiing, and it's kind of a little bit of a mind blower, a little bit. But I think you had it always in you, some kind of an entrepreneurial spirit, right?
Yeah, I think, generally entrepreneurs are entrepreneurs, right?
Yeah. Do you believe they're born or are they created?
I've seen so many different, you meet the hardcore born for sure as an entrepreneur. But, again, if you think about it, again, I talk about private equity as this thing that's evolved in our lifetime. Private equity in the real estate world literally didn't exist a decade ago. There were all these things, no one knew what to call them. They called them alternatives, or I don't even know what they call them. If I gave you 10 grand and invested in a mortgage deal, there was no real name for it, right? So same with entrepreneurship. I mean, entrepreneurship and starting your own business today compared to 10 or 20 or 30 years ago, it's evolved into this very normal thing that 30 years ago, if you were an entrepreneur starting your company, you were a wacko. There just weren't that many people doing it. Yeah. Right.
Okay. What advice would you give? So I'm going to paint the picture here quickly. Is there's this young gentleman sitting in this chair over here, just about to embark into the University of Calgary, full of piss and vinegar and head full of dreams. It's a young Dave Steele at 18. What advice, if you had an opportunity to give advice to your 18-year-old self? Now I know you have children of your own, and you have nurtured and given, and they're just amazing kids. Just as an FYI, what advice would you give young 18-year-old Dave Steele?
The first thing is you got to find your passion, right? And it's easy to say just go do it, right? That's not great advice for people that aren't action takers and doing it, right? So, I would say, first of all, the people that are connected with you, most of those people somewhere along the way have made a serious commitment that they want to go and do something. So then I would say, you're right. Okay, now I've made this commitment and I put myself in this pot. So first of all, you put yourself in this pot, you're in a small percentage.
Yeah.
You're not in the 80%, you're in the 10 or the 20%. So now of the 10 or the 20%, what's the differentiator? The differentiator is you've just got to go treat it just like any other business, and you might have to raise money so that you can leave your job and go do this. You might have to, lots of people raise money to go start a chain of ski stores, right? Like it's no different than any other business, but you just really got to get focused on what section of the real estate world you really want to be involved in, how you want to go do it, and then go set out and do it like a business.
Right. Just get serious about it and treat it like a business.
Right. Go build apartment buildings. Yeah. Go renovate houses. Go build suited single family homes. But I think you got to get a geography. I think you got to get a real estate type, and I mean I can remember many times in my life sitting down with just little cards, and I'd write all the different things on the card with a map, and I would say, okay, where can I go do those? Like the value add that exists in the US, it exists a little bit in Ontario, it exists a little bit in Quebec. It doesn't exist that much. It's very hard to do in BC because of the rent evictions. So, if I took value add and tried to plunk it into BC, it's not that easy to do. If I took build new buildings, lots of places you can go build new buildings in Alberta, probably way more so in BC and Ontario today than in Alberta, but there's still places you can go build in Alberta, but way more so in BC. So, again, I think you just have to say, if the business I want to be in is real estate, it's too easy to just say, I just want to go and figure out capital raising, because that's like saying to somebody, I want to open up a clothing store, but all I want to learn how to do is sell at the front desk. I don't care how to manage the inventory or pick what colors to sell. You're really in it. You're in the whole thing.
Yeah. Well, and this next question is, you have the benefit of being 40 years in of doing this.
Now you make me sound old.
40 years. Well, you started when you were 5, right? So, but where did you go anywhere formally for training in business, or was it just kind of the school of hard knocks, or just like where did you? I'm going to ask this question, just kind of where did you go to learn this, and then I'm going to ask you if there were some people that were influential that you maybe want to acknowledge that helped you on your journey. So where did you go in your journey?
So I went to university, and I was very, very lucky. About 30 years ago, a group of us started Entrepreneurs Organization. Vancouver was one of the founding chapters. In fact, we were the first chapter.
EO. It's not as young EO. Different.
And today there's 12,000 members around the world. So, probably most of the mentoring and the knowledge and what happened, I would say I got from people, and probably
just from a peer group.
And probably the biggest single motivator, no different than going to a RAIN and seeing how did that guy go and buy that many units, is they have international conferences, of which I've been to 40 international conferences around the world, and every time I'd go, I'm sitting at the second night and we're having dinner, and all of a sudden I'm listening to some guy from Morocco who's got a $50 million business and he's 30 years old.
Yeah.
And it's like, how did you do it? Yeah. Right? And you go home and you feel like, man, am I ever snoozing, right? Or so it, most of it is there's that, and then once you get into these good networks, I guess it's really just connecting with people to sort of say, here's my roadblocks, what did you do to get over those? And just not spending a lot of time worrying about the roadblocks, just kind of putting your head down. And the thing I find is people, I find in most cases, I don't say no, I say yes, and then I find out more information.
Yes.
A lot of people I find they'll say no, and then all of a sudden, because the opportunity that exists very seldom exists in that first conversation. The first conversation isn't where the opportunity exists. The first conversation exists when you finally get into it all and you understand all the facts and you go, hey, this is a really great deal, but like, it's not a great deal at this price, or it's not a great deal unless we do this, this, and this, right? And then you go, hey, I think we could do something, but we'd have to do it this way.
So really, you're a very big proponent, if I heard correctly, of expanding your network, of hanging out with people that expand and push you.
Correct.
Yeah, and I remember you sharing a story once that you were at one of the EO events and you were sitting there and a guy was beside you. He looked like he was really distracted. And he was on his phone and then all of a sudden you just kind of said, dude, like, and we're here. And he goes, oh yeah, I'm just having my app is launching or something. And it was something like a $50 million launch or something.
Yeah, he had set up, he was the call-in phone numbers for
American Idol,
for American, the equivalent of American Idol in Spain or somewhere. And his app went live, and every time the phone rang, he got a penny. And in the course of sitting down for dinner, he had something like 900,000 calls had gone on his phone.
Yeah.
So now, next thing you know, he's got the phone with the ringer turning over, and he's passing it around the table, and we're having a cheers every time it hits a new 100,000 level.
Oh, that's an awful lot of cheers.
But you turn around, and you go, my God. So your business is you make a penny every time somebody calls Spain's America's Got Talent. Like, that's crazy, right? So,
well, and that's just expanding your network of people you hang out with.
Right.
Anyone you wanted to acknowledge has been someone special in your journey to this point? And
God, I mean, just so many, just so many different people. Just different. My partner Phil was was incredible. I mean, every I'd start and I'd literally go down company by company and name all the different people, but I don't want to do that because chances are I'm going to forget people.
Well, and you're much too humble to that.
But yeah, I mean, there's no success without a pile of people making it successful, and so that's really the key in everything we've done.
Couple final questions. Sorry if they're just way too out there and deep, but I just want to know. Like, I truly believe in self-awareness is one of the most important skills that any person can have. And I know you probably have thought a lot about this. Have you enjoyed the journey? Has this been? Are you happy with what you've done so far?
Phenomenal. I mean, I think again, if you're not having fun doing it, if you're not. And probably the reason most people aren't having fun is that they're letting themselves get drawn into the parts of the job that they're not good at and they don't want to be doing, right?
Yeah.
If you were on a stage speaking 4 nights a week, you'd be in your absolute heaven, right? If you were doing your accounting 40 hours a week, you'd probably cut your wrists. So to me, right now, and then that's the benefit is I have the choice. I get to spend the vast majority of my time doing the things that I want to be doing. And again, that's part of why I also create the system where I look at the things that I'm never going to do again, and I take them off my list.
But you've had to in order to get to that, I'm going to call it a luxury of being able to choose what you want, where you want, and do whatever you want. You've had to probably make some sacrifices along the way. Right? Is that something that, or do you not look at it as that? Do you just look at that as the cost of tuition to get to where you want to get to?
Yeah, I mean, for sure you do. There's no question. You look back and you look back at how hard you've worked at different times in your life, and I mean, it's just the way it is, right? It's like if you're going to do this and you think it's all going to be roses, it's not. It's going to be some tough times, and you surround yourself with people that can help you get through it. You're gonna get through it.
So, any regrets you've had over this up to now?
Nope. No, I don't. I mean, I could tell you tons of real estate stories that I wish I'd never sold. And but at the end of the day, it's like you don't really get the choice of going back and looking at those things, right? I
wish we all had time machines.
Yeah,
But everything has happened for a reason for you to shape who you are today.
Totally.
Wow. So couple final things. I want to offer you, and I've offered this a couple times, but I want to just reiterate. I always offer at the end as some gratitude. I just want to thank you for how you show up, and I want to thank you for your openness and willingness to share. Here's an opportunity, guys, that we have of somebody who's done an incredible result within real estate and no slight here. You're just a normal guy, right? No, like, there's no slight. You're like one of us. Like, if you ever get a chance to sit and have a beer with Dave or sit and break bread, he jokes around. You tell it's just you're like one of us, and you have a gift of making us feel included, and you also have a gift of bringing out the laughter and the fun in everyone you meet. I just wanted to offer that to you.
That's very kind. Thank you very much.
One last question I always leave off with this is, if you were just, and pick one of the 3 cameras, whichever one you wanted to have, if you were to give, maybe somebody's a little stuck right now, or they're just maybe a little lost, maybe just some final parting wisdom for somebody, and final inspiration to have somebody just take the next step.
Breathe, enjoy it. First step is really ask yourself, are you in the right space? Are you doing the right thing? Is this really what you want to be doing? Yep. And is there a big opportunity in front of you? Because if there's not a big opportunity in front of you, then go spend some time. Finding opportunities is work. So if you turn around and you say, look, I don't know what I really want to be going and doing, if you go and put the same 20 hours a week in that you would if you said, I'm going to go buy duplexes in Edmonton, and you got in your car and you drove for 20 hours a week in Edmonton, you would find duplexes in Edmonton. So if you put that same energy into just saying, what exactly is it I want to be doing? Do I want to be big in Victoria? Do I want to be big in Vaughan, Ontario? What is the product? What is the location? What do I want to be doing? Do I want to go raise money and lend it to people that are doing real estate deals and I make 15% or 12% on my money? Like, what is that? And if you've got that, then if you've got that and you know it and you believe it in your heart and you've got proof that you can do it, then the plan to go and make it bigger is actually not very hard. The real question is making sure that the opportunity you have isn't a crappy little idea that you're trying to fan to make something good.
Yeah. And just being very intentional every step of the way.
Right.
If somebody wanted to get a hold of you, where would be the best place to reach out? If you're, and I know you're taking some time off, and
just shoot me an email, dave@wcpg.ca.
WCPG for Western Canadian Properties Group.
Got it. Right. .ca like .ca. California.
Right.
Yeah.
And you can find them online. You're all over the place.
Totally.
If they can't find you online, then somebody's not doing their job.
Right. And just remember, everything you heard today is free advice. So if you don't like it, don't forget what you paid for it.
Well, Dave, thank you very much. And guys, you know what we do at the Raising Capital Academy. When you're listening to this, we acknowledge people that have given their time. So be expecting some thank you cards probably coming in the mail.
Appreciate that.
And I just wanted to thank you very much. Thank you for your time. Okay, guys, till the next one. Bye for now. I sure hope you enjoyed this in-depth training video, and I applaud you for sticking around right to the very end. I believe in people that show up, put in the work, put in the time, and effort should be rewarded. If you're interested in taking the next step, if you're interested in going deeper and mastering what you just learned about in this training video, I encourage you to check out the Raising Capital Academy. So if you have found that you've received some value from the YouTube channel, or maybe you've listened to a podcast, you're only scratching the surface. That truly is just 1/10 of 1% of all the content and materials that have been created that are waiting for you on the other side. So I encourage you to check out the Raising Capital Academy. There's more than 100+ hours of video content, audio content, exclusive training material for those that are interested in taking the next step, those that are interested in going towards mastery, those that are interested in moving forward with velocity. So I would encourage you, wherever you're watching this video, around this video will be a link where you can check out all the details of the Raising Capital Academy. After you've checked out all the details on that page and you're interested in moving forward with velocity, click on the link that will take you towards the application. This is by application only. This is a community program and is for serious action takers only. So if you want to step up your game, if you have goals and dreams and aspirations for more, if you'd like to make a difference in the financial futures of the most important people in your life, I highly encourage you to check out the Raising Capital Academy. Click on that link and you'll be taken to the next step in the process to see if you qualify to take the next step forward for you. Hope to see you on the other side. Bye for now. Hey, I sure hope you enjoyed this video. If you are interested in moving forward with velocity, if you're interested in being a successful real estate investor, only 2 simple next steps from here. Number 1, below where you're watching this, there will be an opportunity for you to subscribe. And over here will be a hand-selected video for you to keep moving forward. Continue your journey forward. Just click on over here for that hand-selected video for you, and we'll see you on the other side. Thank you very much.